That was 35 years ago. I mean, how do you negotiate?
Well, good morning, everyone. It's 10 o'clock, so we will call the December 12th, 2024 meeting of the Oklahoma City Employee Retirement System to order. Item number 2 on our agenda this morning is to approve the minutes of the meeting of November 14th, 2024. I have a motion and a second. Please record your vote. Item is approved. Item number 3 is the consent docket. We have several items we can take with one motion. I have a motion and a second. Please record your vote. Item is approved. Item number 4 is to ratify approvals. I have a motion and a second. Please record your vote. Item is approved. Item 5 is to approve the claims docket. We have a motion and a second. Please record your vote. Item is approved. Item 6 is to approve the following applications for service retirement. We have a motion and a second. Please record your vote. Item is approved. Item 7 is receive report of death, authorize payment of the $5,000 death benefit, and approve continuation of pension to spouse. We have a motion and a second. Please record your vote. Item is approved. Item 8, receive report of death, authorize payment of the death benefit, and authorize secretary to make necessary changes to conform on the following. We have a motion and a second. Please record your vote. Item is approved. Item 9 is approved request of the following to terminate vested rights and commence retirement benefits. We have a motion and a second. Please record your vote. Item is approved. Item 10 is items for individual consideration. Item 10A is receive Oklahoma City Employee Retirement System Board 2025 regular meeting schedule. Chair will entertain a motion. We have a motion and a second. Please record your vote. Item is approved. Item 10B is amendment number 6 with Davis, Graham, and Stubbs, LLP for professional legal services, January 1, 25 through December 31, 2025. Estimated cost $35,000 per year. We have a motion and a second. Please record your vote. Item is approved. Item 11 is to receive the investment consultant report. 11A. Good morning, Patty.
Good to see you all. We have a fairly short report today, just an overview of the market and update on the November performance of the overall portfolio. If you flip to page 3, just have a snapshot of what's taken place in the market, and markets continue to do very well. Global growth is strong, really driven by the U.S. consumer. Inflation is in line with expectations, and the Fed cut rates another 25 basis points early in November, followed by a previously 50 basis point cut in September. Based on the most recent inflation numbers that just came out yesterday, markets are pricing in or expecting another 25 basis points in December, and then potentially a pause. A lot of unknown as to what might happen once we go into the first part of the year, and with the change of the administration and all the new Trump policies that could potentially take effect. Looking at the overall markets, small cap stocks were the best performer in November, up 11%, followed by large cap U.S. stocks, up 5.9%. On a year-to-date basis, small cap stocks are up 21.6%, and large cap stocks are up 28.1%. If you look at the one-year return for small cap versus large cap, small cap stocks are now outperforming on a one-year basis versus large cap, which is a little bit of a reversal. So this one-month return in November really boosted the index return on a one-year basis for small cap stocks. Non-U.S. stocks have really been hurt by the strong dollar, and you'll see they were down slightly in the month of November, down about 0.5% for the U.S. or non-U.S. developed markets, and then emerging market equities down about 3.6%. Markets really reacted favorably in the month of November to the election results and the new administration, the agenda items that are kind of set forth. It appears to be a very pro-business policy, with changes expected to trade and immigration. And that the trade or tariffs could potentially also further benefit small cap stocks, but potentially negatively impact the large global multinational companies. Within the bond markets, the U.S. aggregate index was up about 1%, just a little over 1% in the month of November, and is up 2.9%. After the election, we saw rates rise a little bit, but then come down in anticipation of another Fed rate cut. But looking ahead, global equities in general have done very well, particularly U.S. large cap and small cap stocks on a year-to-date basis. For the first few weeks, or the first week and a half of December, they continue to rise. The Fed is expected to cut rates one more time in December next month. If anything, if that were to not happen, we could potentially see a hit or an impact on the overall markets. But then looking ahead into 2025, given where we are with equity valuations and given where we are with bond yields, our expectations for 2025 are a little bit lower than where they were when we came into the start of this year, just given the rise in valuations. Looking at your portfolio, if you go to the next page, on page 4, portfolio is valued at $923.6 million as of the end of November. That was up about $30 million from the end of October. When you look at your overall asset allocation, you have a target allocation of 60% to U.S. or to global equities, and 25% to fixed income, and then a 15% allocation to real assets. Everything is in line with those target allocations. U.S. large cap continues to be a little bit overweight, and the target there is 15%. The actual allocation is 21%. But as a reminder to the group, you have a target allocation of 15% to private equity, and that additional, right now you're currently at 10%, and so that 5% underweight is being held in the large cap bucket because it takes time to get to that 15% target as capital is called, so that'll happen over time. Also within the fixed income space, you all approved a change to the fixed income manager lineup at the last meeting. We are currently working with your attorney and staff to work through those documents, and it's anticipated that we'll liquidate the WAMCO and Brandywine portfolio next month, so that we have Pioneer funded on February 1st. So that'll be the kind of the go date for that. And then there'll also be some rebalancing that takes place within that, because the new Pioneer multi-sector strategy will represent 60% of the fixed income portfolio. Real estate is slightly underweight. You still have about a 2.5% outstanding commitment to some of the opportunistic strategies such as BlackRock and Starboard. So as that money's called over time, that will increase the allocation to the overall real estate bucket as well. On page 5, we have the results for your total portfolio at the very top in that light blue bar going across the page. So on a year-to-date basis, the total portfolio is up 10.1%, 1 year up 14.8%, and then over 5 and 10 years, 7.5% and 7.1%. So achieving that 7.5% absolute return target. On a year-to-date basis, the portfolio is up 10.1%, slightly behind the policy index. The majority of that can primarily be attributed to the allocation you guys have to private equity. Your private equity portfolio is up 7.5%, but is being benchmarked to the S&P 500, which is up 28%. So that 20% return difference and a 10% allocation there is accounting for about 200 basis points, or almost all of that underperformance relative to the policy index. Over a long-term time horizon, you're beating that objective. And, as a reminder to the group, the private equity isn't marked, the portfolio values are delayed and they're not marked to market on a monthly basis. So that's why you see the delay there. No major concerns with any of the managers in the portfolio. U.S. large cap continues to be the best performer, followed by small cap, U.S. stocks, non-U.S. equities up just under 4% on a year-to-date basis, and emerging markets up just a little over 5%. Fixed income portfolios up about 2% on a year-to-date basis, and then the real assets portfolio is flat. But again, those assets aren't marked on a monthly basis as well, so there's a little bit of a delay there. Any questions on the overall portfolio or any of the managers or the transition that'll be taking place?
I have one question that might be more for Gina, or really probably for our actuary. I just noticed at the top, and well, it's been there, I've paid attention to it again, the total portfolio and then the net of fees amount is obviously less because fees get deducted. Does the actuary, when they're looking at what returns we get, are they looking at the portfolio or the amount net of fees?
It's the net of fees.
Okay, so in that case, we're not meeting the 7.5%.
On the 10-year,
target.
you're right,
Yeah.
on the 10-year time,
So
it's 6.6.
I just wanted to, yeah, okay.
My apologies, you're correct. All right, thank you.
Thanks, Patty. Okay, Chair, I'll entertain a motion to receive the monthly investment report. We have a motion and a second. Please record your vote. Item is approved. Item number 12 is to elect a chair for the term of January 1, 2025 to December 31st, 2025. Chair will entertain nominations.
If you're willing to continue, I would nominate Paul Bronson as our chair.
I'll second that.
We have a motion and a second for me to continue for another year. That's okay. We have a motion and a second. Record your vote. Item is approved.
Congratulations.
Thank you for entrusting me with the chairmanship. Item number 13 is to elect a vice chair for the term of January 1, 25 through December 31, 25. I will nominate Brent Bryant.
I second.
We have a motion and a second. Please record your vote. Item is approved. Thanks, Brett. Item number 14 is comments from board, staff, and citizens. I just want to wish everybody a very Merry Christmas and Happy New Year, and see everybody in January. Okay, we are adjourned at 10:15. How about that?